Well, if you're buying a home, for most of us, a really important part of that is making sure that we're securing a loan that's, well, the best rates and all the paperwork is taken care of, and you know that you're with a professional. And that's why we're speaking with Jim Green today. He's a mortgage loan officer with Union Home Mortgage. Jim, hello.
Good morning.
We're so glad that you're here. We've had tremendous experience with you, actually having even saved an account for us by having you look something over and being able to, I don't know, I want to say work your magic, but find a way to accommodate the particular situation. And so we were just so impressed. I couldn't wait to have you on the show. Why don't you first start out talking about Union Home Mortgage?
Well, Union Home Mortgage, we're based in Cleveland. My office is right here in Mount Dora at the entrance to Waterman Village. I'm also licensed in Michigan and Kentucky, so we can help the people that are looking to get out of the cold like I did, and have a winter home down here in beautiful Central Florida and Mount Dora, which I've always said is one of the best small towns I think in the country. You know,
Yes.
yourself, and congratulations on becoming a newly licensed realtor.
Thank
So
you.
for those people looking to buy that second home, they've got the contact that you need. But yeah, Union Home Mortgage has been around for I think about 40 years now. We're one of the fastest growing lenders in the country. It's a great company to work for. The nice thing that I've said is I've worked for banks that have mortgage divisions, so they have other services. With
Right.
Union, we do one thing, and we do mortgages. So we better do them right,
Hmm.
or we're not going to be in business for too long. This
Absolutely.
this is what we do and what we have to do right.
How is it that you're able to save an account when other people have I guess I'm just kind of asking, how are the different areas that you're able to look at? You kind of think that when you go into McDonald's, there's one menu and you can order off that. That doesn't seem to necessarily be the case when it comes to mortgage lending.
No, sometimes you've got to be creative. You've got to think a little bit outside the box because not everything is exactly black and white.
Mm.
You just look for ways not to be generic, but you look for ways to make the deal work. And there's certain things we can look at. Maybe a customer's thinking about putting additional down payment down, but they need to pay off a debt to qualify.
Mm-hmm.
So it's just a matter of sometimes moving money around, just looking at the different options and sometimes the different products too.
Hmm.
The sad thing in our industry is, as much as the changes have made it much more consumer friendly, there are still products with other companies, not with Union, with other companies, where a product is more valuable to the company than it is to the customer.
Oh, okay.
So they will kind of move them to that product. We're the same way with every product. So it's also fitting the best product for the customer. And then, again, something you just have to be a little bit creative in your thoughts and figuring out how to make things work.
There's also something very positive and comforting about you being local. I mean, this radio show is in specifically Central Florida. Being able to just run over and pick up papers and meet with you eyeball to eyeball, makes a difference.
Yeah, it does help as much as, again, I talked about being licensed in Michigan, and a good majority of what we do is all electronic.
Hmm.
And with our younger people, they really like that. The younger
Sure.
crowd, they're not necessarily ones where they want to sit down and have a face to face. They like
Sure.
to do things
I,
electronic.
I'm traditional, right? Yes.
I'm the same way. Let's do things the old fashioned
Yeah,
way.
yeah,
So, it's nice to have both options.
absolutely.
But, so for our Michigan, Kentucky people, we have local offices if they need to drop stuff off, but we can do a Zoom call if they have questions. We can do screen shares. So one of the good things that's come out of the pandemic and having to do a lot by Zoom is the ability to now do a Zoom, do a screen share, answer questions as if you're in person,
Hmm.
or we can sit down at the at our conference table in the next room and do it in person if we need to.
That's a good point, though. But even Zoom, there's something about video. There's something about being able to see someone and see their expressions. And I mean, 93% of communication is nonverbal. So
Right.
if you're only sending documents, I don't know, it's a lot of money. I just want to know that I'm dealing with somebody who's warm and competent. I was going
Yeah,
to make a joke, but
yeah,
people
no,
live in basements all the time, and there's nothing wrong with that. I'm just saying.
yeah, I remember, I remember the calls before, in situations like that, and you're shuffling through paperwork, and he's like, all right, go to page 7. Well, I might have a couple of pages that printed on mine that it didn't print
Oh,
on what I sent. So they're like,
right,
well, my page 7 is different than yours. So it's like, well, what
right,
is your page? So we're
right.
matching up documents to figure out, okay, now we're on the same page. Let's go
Yeah,
through this and take a look at it.
yeah, that's a good thing. So, as we look at trends, where we've been, where we're going, we're in a seller's market, and interest rates are just incredibly low. I
Mhm.
mean, I remember telling my kids there was a time when interest rates were like 19%. Like, what? I mean, this is pretty much since they've been in the house buying age. These rates, under 5% is all they've really known. Do
Yeah.
you see that sticking around?
In a short, no.
Really?
Yeah. Yeah. I've been telling everybody, and it's funny you talk about when I got into the business, it'll date me a little bit. Um, Prime was at 18. Mortgages were being written at 21%. That was the
Wow.
Jimmy Carter days back in
Yeah.
1984. So we've seen them really kind of pull back to historic lows, last year and little trend up. But, and that's the one thing I've always said. And it's funny because I'll hear people, it's like, well, what's your rate? And you'll say, it's 3.125. That high? And you have to laugh a little bit. And if anybody in
Right.
the audience has said that, I don't mean any offense to this,
Right.
but
Right.
think about it. When you're talking about something at 3.125, and you're talking about it being that high,
Yeah.
when
Yeah.
historically over, 100 years, it's, 5, 5.5, 6, 6.5 used to be a really good
Right.
rate.
Yeah.
But, uh, you know, long and short, no, they're not going to stay down for a couple of different reasons. And, one of the things I heard on one of our daily calls is the president of our company sat in on a call with the heads of Fannie Mae, one of the primary conventional underwriter for conventional mortgages, and they did their prediction for 2022. The one that stuck out to me, and the good one for you, is that they're seeing purchase business is going to be off by about 10%. And I think that has a lot to do with supply,
Right.
nothing more. The one that stuck out to me is they said refinance business is going to be down by about 40%. It's not because everybody in the country has taken advantage of these rates. The scary part is I think there's probably over 60% of the country has not.
No
I saw
kidding.
an article, yeah, it was like 63% of the country is, like 4.5% or higher, something 4.75 or
Wow.
higher.
Wow.
But if your refinance market is going to be off by 40% next year, it's telling me that rates are going up.
Ah.
Now you combine that with the Fed's announcement yesterday that they're going to see 6 to 7 rate increases by the end of 2024. Now that's a long way off, but
Mm.
you start putting that thought in the market's mind, rates are going to go up, and they're going to follow that. So the third thing we need to look at is over the last 18 months, the Feds have been pretty much controlling interest rates with the amount of securities that they've been buying, mortgage-backed securities and bonds. So they've really been controlling it. I saw an article that says they're buying on average about $120 billion a month
Wow.
in these securities. So they you hear a lot about quantitative easing and tapering, and there's been talk that maybe as soon as this month, which it doesn't look like it's going to happen, but it's going to come in the coming months, the Feds are going to stop buying, or they're going to start tapering down and buying less.
Okay.
So that will then start going to the open market for investors. Well, investors aren't going to pay the same rate that the Feds are paying.
Okay.
So you're going to see that spread of investors want more for their return. The Feds don't. If they make zero on the return, it's fine. That way they control interest rates. Investors aren't going to be that liberal with it. They're going to want a return on it. So you have to pay more for your money. That's going to reflect in higher interest rates.
Okay. Wow. That's not the answer that I thought. I thought we were just going to continue to skate through, and we have all the time in the world not to worry about it.
No, it's I've come up with, and for months and years, I've come up with a saying, for people, people, it's like, oh, I think I'll wait until it comes down to eighth. It's like lock in your gains. You know,
Yeah,
sometimes an eighth of a percent is very, very minimal in the big picture. A quarter percent
sure.
is minimal. Lock in the gains. If you're at,
Yes.
4.75, 4.875, and you can lock in three and a quarter, don't, I hate
Huge.
to say it, but don't get greedy and wait for three and an eighth.
That's a really good way to say it. That is
Yeah.
to the point and very true. So while we're looking in your crystal ball, can we talk about the real estate crash of 2008? Where do we stand with the potential of that happening again?
Not going to happen.
Really?
Simply put, it's my opinion. I think it's everybody's opinion. It's not going to happen
Okay.
again for a couple of different reasons. The biggest thing right now is forbearance, and everybody's like, "Oh, I'm going to wait till all these people in forbearance go into foreclosure and lose their homes, and we're going to see another pullback and a crash," and it's like it's simply not going to happen. So a couple of reasons. I was reading an article that in April there was 2.2 million homeowners in forbearance. Now, if you go back to 2008, there was, I think at one point, like 7.5 million people that were delinquent.
Okay.
So we're already considerably ahead of the curve. And these
Right.
people in forbearance aren't delinquent. Of that, about a third of them they didn't even know they were in forbearance, because there was a time period that if somebody called and inquired, that lender just put them into forbearance. They didn't even know it. They continued to make their payments. When they found out about it, they pulled out of it.
Mm.
Now there's 1.6 million people in forbearance. So 600,000 people have already exited forbearance.
Okay.
So the government's going to put programs in place for lenders to work with customers in forbearance to help ease them out of it.
Mm.
So let's say worst case scenario, half of those people can't do it. They didn't manage funds properly. They can't come out of forbearance. They go delinquent and actually go to the start of foreclosure. That's 800,000 homes.
Okay.
You have one of the best sellers market in history.
Yeah.
All that's going to happen is those 800,000 homes, if they're smart, they're just going to sell them. They're going to make the profits while the market is hot.
Mm-hmm.
It's going to increase our inventory. It's not even going to take our inventory back to where normal inventory should be.
Right. We're still going to be way ahead. Yeah.
Right. So it's going to help inventory. That's going to ease prices back. I think worst case scenario, we're going to see a small pullback in values, 8-10%. Crash is not happening. And those people that it's like, oh, I'm waiting for the market to crash to buy my house, it's not happening.
So this has turned into an interview of asking you to look into the future. So let me ask you this. One of the things that we're seeing is homes not appraising at what they're being bought at, because it's a seller's market. And of course you want the most you can for your house, and people are willing to pay it,
Right.
It seems like because there's a trend, it's almost like they're trying to correct the market or something. It seems like there is an effort. What are you seeing when it comes to homes not appraising at?
Honestly, we've been, knock on wood, cross your fingers. We've been very fortunate that that's not something that has been consistent. We've dealt with it a little bit like everybody, but that's not something that has been an issue. And something to keep in mind, there's a lot of cash buying going on.
That's a very good point.
It really only takes 2 sales to set a value. So if you have a house in a subdivision that is valued at 350, and you have 2 people pay 7% over it, and they pay 375 cash for these homes.
Sure.
As soon as those sales are completed and the deeds hit, they've kind of set, as long as it's a similar home, they've now kind of reset the value for that home.
Wow.
So we're really not seeing a lot of it. I think
that's good to hear.
I think best case scenario, appraisal issues in the next 6 months going forward as we come out of this forbearance thing. And I think if we see inventory pick up, appraisal issues are going to be non-existent because you have an inflated value. As prices pull back, you've got, high increased values out there. we're not going to see that. Right now, it's minimal, and it's only because there's not a lot of sales to support the new value.
Okay. It's good to have those checks and balances because that's kind of what happened, going back to 2008. We've learned a lot, and there's now I can hear you saying they're putting things in place to make sure, okay, we're not going back there. That's not going to happen. That's
Yeah,
and even
and leading up to 2008, there was a 3, 4, 5 year period that we used to call it fog the mirror test. You fog the mirror and you were buying a house. All of those
mm,
programs are gone. They've never
mm,
come back. They're never coming back.
mhm.
It's still a very secure market, and a lot of people might not want to hear this. And if you want to cut it, you might cut it. As much as you see Fannie Mae, Freddie Mac, the conventional underwriters saying that things are loosening up, they're opening their guidelines and some of their restrictions, they are, but at the same time, they're also tightening them.
Mm,
So
mhm.
as we see the market open up, we're also seeing requirements and guidelines become a little bit more restrictive and qualifying a little more difficult.
They're making us go on a diet. We
Yes.
know it's good for us, but it's not pleasant during the process.
Now, for the people that are concerned, it's like, well, then I'm never going to qualify. Absolutely not, because with those customers, you look at them and say it probably should be a great conventional buyer,
Mhm.
but they make an even better FHA buyer.
Ah, that's really good to hear. We are kind of starting to wind down, but I want to know, what are your estimates for purchases and refinancing for 2022?
Um, Kind of going back to the conference call when they talked to the heads of Fannie Mae,
Mhm.
they're going to be the ones that know what's going on. Again, they talked about refinancing being down by about 40%. Um, it's still going to be a good market.
Mhm.
I don't think we're going to see crazy rates. I think we might be upper threes,
Okay.
somewhere in there. But if you're at 4%, the makes sense part, it makes less sense.
Yeah.
The mortgage market, I think it's still going to be a little bit tough just because of inventory. But again, they're only calling for a 10% pullback. And it's been a great year. It's
Yeah.
been a great year. I think purchase wise, I think we've got a good run for several years.
Okay, that is good news. Well, thank you so much. Some really surprising information, and I love just you're blunt and you're to the point, and we need to maybe heed your advice and refinance when we can. I
Yeah,
mean,
it's
yeah,
it's one of those. Like I said, it's. I talk to so many people, and I don't mean to be offensive, but I always say don't get greedy.
yeah,
It's
really good.
it's funny. An eighth percent on a $200,000 loan is 12, $13 a month.
I was just going to ask you, do you have kind of a general rule of thumb of what a percentage point is, or an eighth of a percent or something?
I don't, because I just do everything on the system.
Okay.
But just from talking to different people,
Yeah.
it's minimal.
Yeah.
And in markets like this that are somewhat more volatile and active, you will lose more on average than you're going to gain.
Hmm.
And we're seeing that now with the Fed's announcement. We're going to lose. Now there's going to be a little bit of a recovery, but it's, you're going to take 2 steps back, 1 3/4 forward,
Ah,
2 steps back, 1 3/4, 1.8, 1.9 forward. It's going to be a gradual back to
right.
higher rates. It's going to
We're
be
not gonna
slow.
wake up one morning and go, "Oh my gosh,"
No,
Yeah,
no,
yeah,
no. But it's going to be gradual pullback. But you hit one of those bad days, you may never recover from it. Some of them
yeah.
you will, some of you won't. But I've seen a lot of people lose a lot of money because they wait for that extra eighth, and by the time they pull it, pull the string on it, they've lost a quarter or 3/8.
Mhm.
Lock them in,
Lock it in.
lock in the
Jim,
game.
for those that are listening on the radio station, how can people get a hold of you?
A couple of different ways. Best way with my office number, which I also get through my cell phone, is 248-504-0131. You can email me at jgreen@uhm.com. Or if you want to visit my website, all of my contact information is on there. It's www.uhm.com/jgreen.
Very good. Jim, so good to talk to you. Thank you for your time, and I'm sure we'll be chatting again soon.
You too. Thanks
Thanks.
again.
Bye-bye.